Okay, guys, we're live. So, good morning, and we're going to do a look at setting the VIX up. So, we're going to be on the first day of the month, right? So, I'm going to put JATS PT on the chart a few different times. So, we're going to do HVOL, RVOL, the regular 14 period, and then we're going to do HVOL and RVOL 1 period. And so that's open and close, HVOL, RVOL for 1 period. Okay. So we can go in and modify the settings. So here's your open, here's your close, here's your 1 period open, and here is your 1 period close. So with the modifications, you can see that the distribution shifts. And there's another thing that we need to do. We need to adjust the data series. You want to change it from use instrument settings, which is normally the default for all of your NinjaTrader charts. You want to change this to default 24/7. This is the only instrument that refers to default 24/7. All right. So you see the VIX is almost precisely at that lower one, 1617. So you have your ones, which are the inside range, the twos and the threes. The twos are the expected range. That's your 68%. The ones are 34%. And the threes are 95%. So I put the extra 5% going from 95 to 100 with Jive. And with Jive, I have 2 different ways to do it also, or 4 different actually. But we'll just look at 2. So on the open options, we can run the calcs off the Globex or the settlement. Settlement is what Friday was. And then when we add a second instance, that'll show you that 2:15 in the morning. Okay. And then the spear, so that's the shield. So let me explain that. That's your structural rails, your support resistance structurally for that time period. This is a daily. And so what we want to do is add the spear, and that's the variance trading model. If that structure breaks, we want to carry it out. And so there is 1 and here is 2, and we're going to do the same thing. We're going to change the where did it go? Well, here it is. I'm sorry. On price. No, we want to stay on each tick. Well, I guess we built it in to spear, so we don't need to do that. My apologies, just on the options. We want it to go off the open. All right. So we'll just apply this, and we'll see that the calculations are running, and then that will add some extra lines to the chart. Meanwhile, we can, here we go. So that's pretty cool. We have a little upward channel here, and now we're back inside of it. Went right to the top of this structural one. And then here we broke and went into the threes. And now we've come down and hit this green isomorphic level with the one. Didn't get down to the threes. But this is isomorphic range, which is the Gaussian distribution based on the VIX index. And we can take these settings and then put them onto ES and SPX, which is very interesting because that takes us from that 95% to the 100% of the distribution. So you see we're carrying outside the threes for that structural support. All right, let's put it on the ES. So we'll do the same. So here we'll just say open, close, open one, close one. And then add the shield. Structure. Globex. And there's just one. Okay. So we're going to also put this on a 30-minute or 60-minute bar. Let's do a 30-minute. Here we go. These lower red lines are the monthly range, and this is a new month. Therefore, that big gap, we just want to pay attention to this. But you can see that the lower lines extend out of the daily 3. Now this is going to update on the Globex Open. At 5 o'clock tonight, we'll get new opens. And this is going to look different, but we'll see where the new bands are at 5 o'clock Eastern, 6 o'clock Eastern. All right, so here you can see on the 1 period, the yellow line is the isomorphic VIX range, and this upper line here is the structural one. Here's the spear one, and there's your structural one. So it stayed inside this zone between the structural isomorphic of the options that we just put on the chart and the dynamic one. There's your bounce box. And you can see that each time it got in there, they were sending it back down. But we can also add higher time frame analysis. So let's put up a weekly There's that bounce box. And you can see why they were bouncing it. Look, there's the weekly one at the top of that bounce box. That's where their risk was. So if you get the bell curve, I've showed you this 1,000 times. All right. So what we have here is the bell curve. And you have your mean, and then you have your ones and your twos. Here's your kurtosis when it stays in the middle. Here's your 1, 2, 3 right here. Here's your mean. Here's your 1, your 2, and your 3. So if it breaks, if it gets on this left side of the mean, it's likely heading to the 1, the lower. And if it breaks the 1, it usually moves to the 2, which is 68%. Sometimes it just disregards that and comes all the way back in. Other times it'll hit the 3 or a tail. So we're able to extend our distributions out before it comes back in. So the dealer on these time frames, the weekly, the monthly, the quarterly, if it breaks the 1 and goes to the 2, sometimes they want it to come back in before the end of that period, right? Other times they want it to just stay up there and wait until the period expires and they're done because they've captured what they wanted to harvest for that period, gamma, theta, vega, whatever they're selling or buying, and their hedges, it depends on where they are in these higher time frames. So here you can see that weekly one was being supported, that resistance. All right, so let's take a look at the new monthly. These indicators are available for NinjaTrader, and they help you visualize that bell curve easily. So let's get the monthly. Here we go. And you can see here that the upper monthly ones are at 70, 21, 70, 31, and 70, 96. So 7100 at the very top. And that's the 30-day calendar day versus the trading days. So the calendar day and trading days are different. When you put the indicator on the chart, you can just use the word month. That's your monthly bar, open and close, as expressed on a daily bar chart. And that's how the dealers run their distributions. Or they'll use a 30 calendar day or 31 calendar day or 28, whatever the actual day of the month is, they'll put that calendar day on it. So here we're in February, and unlike January, you don't have 31 days. This time you have 28. So if we want to add a 28-day distribution, it is super easy to add it to the chart. Just like that. And now we have a full picture of the monthly and 28-day, the number of days in the month, the way the calculations are run. See here, fill in line right there. I had 30 on the chart. So they're very close. So that's going to be another strong resistance. And we're below this white line here at 69, 79, 75, which is sort of acting like the quasi-mean for the month, isn't it? That's your R-ball monthly one. So we might be coming down to this lower end as the market takes a pause at the beginning of the month. The lower end of these ones, 67, 63, 50. So that would get us a higher VIX. So we can do the same thing for the VIX. We can come over here and take a look at the weekly. Let's see. Here we go. 22.15 before the ones break. And here's what I like to do next. I will come over to Quick Strike and Quick Options. First, Quick Options. You can register and sign in. They're not charging a subscription at this time, to my knowledge. And then come over to the VIX. Hit your GEX. Look at your expiry, which is February 4th. So that's Wednesday. So right now, it is at 18 with positive extending to 21. 20 is your high GEX at this moment. This is going to change at the RTH open. So you can see 18 at 123, 20 at 79. So if that 123 breaks, you got 62, 843, and 79 right there between 19 and 20. And this is pretty cool. You can put the heat map on and see that 17 is the high GEX. Now this is just for the one expiration. If you add the 11th in, you see that it's even stronger to the upside. 20. Not so much 21, 19 and 20. And 18, 19, 20 over the next 2-week time frame. So that helps put us right in 1920, right in here, 21 for the Monday, but then bring it back down a little bit right in here. And the lower end of that, let's go back and take a look at our GEX, would be 16.15. And so look, 16.15, 14 at the bottom, 16.15. So it looks like it's going to be trading right in here on Monday. And that's right between, oops, our dashed lines. And that again is the 30-day. Which one is this? On the close. I know it's the close. I'm trying to get these so that they'll be close will be dashes. Oh my goodness, what did I do? Let me do this again. There it is, monthly close. So the way that the number of trade days in the month, the way that this is calculated, the calendar days are off the daily bar, So when I do 30 calendar days, I'm doing 30 daily bar days. When I'm doing monthly, I'm using that monthly open and close, that candle. It's different than the daily, and that's why they're different. So it's that spread between calendar days and the period, like weekly or monthly, versus 30 or 90 or 28 or 90 or whatever. You know what I mean? All right. So we can be as exact and precise as the dealer algos. And that's what you want to do to set it up. So you know your football field, or have a good idea where the easy money is for them to keep it inside that range. Because once they break either down or up, that's usually the go line that they have to, participate. Here it comes down to 1204 or up to 2215. And then it really break down or break up, break out. But we're not seeing any reason for a breakout. That's nowhere near the way the high gex is. When the gex gets high, it's like many hundreds of thousands, tens of thousands, millions. It gets really up there. So no, this is nothing. Now it'll change Monday morning, so keep your eye on it. But then the next thing I like to do is come over to my quick strike and sign in and take a look at the ES for the day, because it gives me the advanced analytics. Right here I can change my model, and I can change the way it calcs, or if I run it off the current session or the settlement. And that's a huge distinction, being able to do this. Nobody else gives you this. So here's your settlement calcs, 69.65 for that mean. And then your current calcs, it's still the same. So they haven't updated. That will update as the Globex Open opens. But let's take a look at volume real quick and open interest. So first, the open interest for tomorrow, max pain 69.70. So 69.65, 69.70, it's going to move away from that, right? Because that's the maximum that they can lose. And we're right here, 69.65, maximum they can win. So it'll move up or down from here. And then come back in, perhaps. It depends on the type of options activity that sets up. And you can take a look at your volume. Here is our 69.65. And you see the high call is up here, 7,200. And it looks like there's far more calls than puts. You can run reports for your open interest to see what is most active, as well as 6,100. It's got the put open interest, and 7,200 has the call. Those are out of money positions. And here's our heat map, which I like to do. And you can heat it by calls or puts. So if you want to look at the calls to see where they're stacked, down here at 70.20, 3708 and 7,000, and we're sitting here at 69.65. So if we want to take just a look at the puts, you can see they're below up here, and it looks like that 69.50 is the first support. Maybe 69.30 if it breaks, or 69.20, but and then definitely 6,900, but it looks like 69.50 for that first support area right here. So we may gap over it. It may gap down. You know, we don't know what's going to happen on the open. It could be muted, or it could be quiet. 7,000, the calls are much more prevalent than the puts. So I would, be looking to see some upside action. I like to go to my quick sheets. I mean, there's so much we can do here. I could spend an hour on Quick Strike with you. Maybe we'll do a deep dive one day for you on Quick Strike. But I set up my own sheet to put the information that I want. They have just about everything under the sun that you want to set up. So you can see they have quite a few choices. Oops. These are the selected columns. I have columns that I could probably thin out, uh, but they give you a lot of premium data points that they have already done the calcs and the math and have set it up as a template for you. And then you can take their pre-calculated selections as your Excel spreadsheet and run your own analytics, because you can export this onto your CSV file and run calcs to get your daily analytics. And when I merge the volume, open interest, and Black-Scholes straddles and delta, gamma, vega, theta with the other predefined selections with Jive and JATS, it's like magic putting all this together. This is something that AI was built for. You need your realized volatility and historical volatility with your implied volatility. Then you have it all. You have a total map. All right. Many time frames at your fingertip. I just wanted to show you what it looked like. So that's it for me. I hope y'all have a great morning and get back to your weekend. Thank you so much.